This is the stock market analysis. And normally this is at the end of the show, but for those of you that are watching this on YouTube, you'll know that I shifted things around because I wanted to get a little bigger picture in here. This is, of course, a chart that has got lots and lots on there. And when I zoom in, it'll be a lot clearer. This, some people describe my charts as just spaghetti because they don't understand them. But then when you get into all of the amazing information in here, you see how we use this information to project the markets. And when things don't happen as we expect, well, that is information also, and we get to use that certainly also. Let's take a look here. This starts out with the great pandemic bubble. Let me just zoom in here so that you can see this period to the market peak, and the stock market rallied through this whole period as the Fed was pumping and pumping, and the government just spending and spending. It brought the market up to nearly a 200% of GDP. Other big bubbles broke well below that, like 157% or 135% of GDP in 2000, 2007. So this was just extraordinary valuations in here. The everything bubble, everything moved up, and that's why the cryptos did what they did and why so many things are correcting. Stay-at-home stocks that lost 90% of their value. That's all really what should happen when you have this type of insanity that lifts markets. So here's where we are right now. Let's just take it from this period of the peak. And what we're looking at here are a minor cycle right in here, a dominant cycle right in here, and you can see where it bottomed right there, and a much larger cycle in here that Katie shook out for us at about 36 weeks. And those all point to a bottom out here in the March time frame. So we looked for this bottom to be forming. It came a little bit late for us in here, but then when it did form, you can see we got this upside movement. Now, our projection in here for the stock market was for it to move up to around 4,000. Now, where did that come from? Well, it came from these rising phases right in here, and the upward turn in the reversal scout here telling us momentum conditions had improved. We also had conditions improving in our other significant indicators, which I showed last week, and I'll just show you right now, looking here at our market monitor, which is a good way to see all of our proprietary indicators in there. And let me just unsort this so you can see the SPY, QQQ, IWM, Dow Jones Transports, and the European Stocks 50. You can see in here an overbought condition when this is orange, so is this. So you're likely to get some pullbacks when you see that. But these turned positive, and that gave us the indication that we were in a positive condition. The NASDAQ is the one that was the laggard. It is improved also to neutral conditions, as you can see in here, because of all the buying coming in now. But overall, this is still positive, and we are looking for continued upside move. Our target right up over here. See this major 38% right there? That target that we had right over there is at around 39.90. There is a minor 61.8 right over here. That's around 4,000, just over 4,000. So that was our first target. You see the market has gotten up close to it right there. Now there is another upward track that you see right in here, which takes you up to the major 50%. And here's the intermediate 61.8%. I don't assume that after just 4 weeks off of the low, the market is going to peak. And everything I showed earlier in this major market look, all is showing us that it's likely that that which is supporting the stock market right now, the conditions of a declining dollar, of declining interest rates, all of those are likely to last a number of more weeks, maybe into the early part of January. So that's what we're projecting as a possibility here. And that this level up here is around 4150, 4160. So this is our upgraded level as a possibility out over here, all existing in what is a very significant bear market. Then out over here, we get into much more negative periods. So here in December, you see this minor cycle. This is likely to get up in here and then give a pullback and then give us a buy area and then be moving up again into this period right over here and then a failure area. You could say, well, what will make the market move down again? I mean, if the Fed is getting closer to the period where it's going to stop raising, December is probably only going to be 50 basis points. And if that's the case, well, what would make the market break? Well, it would be indications that that the earnings are going to do very poorly, that inflation is not giving that much ground, and the Fed is likely to stay at a tight level for a very long period of time. Here is a picture of your whole bear market, and getting up to this major 50 area that is gaining half of this back is a realistic occurrence before it then has its next downside move, which we project will take out this low that it made over here at that bottom, which was just under 3,500. So we could see it getting up to 4,000 and stopping, 4,070 and stopping, or 4,150 and stopping. Those are the important levels that we see in here. Of course, that it all comes from our cycle analysis, swing high, swing low analysis, and all of the important indicators that we bring into our analysis. So that is a look at the stock market, which looks to us like at least another, we'll call it 4 to 6, 7 weeks still to go up in this rally that we're having right now.